Salad customer video 1 and action.
So the reason why we're doing these films is we think it's incredibly important that the consumer's voice is heard. Up until now, it's always been the lending industry reporting on what they're seeing, banks reporting on what they're seeing, other interested parties reporting on that. Now's the time for the consumer's voice to be heard. You'll be able to see the consumers talking about how they've accessed different types of credit in their previous relationships before they came to Salad. You're also going to hear about some of the decisioning processes that we use to make lending decisions. You're also going to hear about how we've met consumer duty and how we deal with our customers beyond the lending process. Some of the people that we've spoken to have got amazing stories of how they've either tried to access mainstream credit and failed, or how they have turned to other high-cost providers during the course of their borrowing. The interesting thing for me is that those consumers have all had a struggle. They've all been held back by their credit score.
I always had a good credit score, never really lent, got a mortgage, got a house. Bought my house when I was 18, we had a car on finance and a very small credit card. That's pretty much the credit I got. The downfall was 8 years ago. I got diagnosed with cancer, leukemia. So I was out of work for the best part of a year and a half. Unfortunately, with a diagnosis like that, you've no control. You come out of work, the job I was at, I was there for under 2 years. They sacked me basically. I had no income. Mortgage still need paying, council tax still need paying, car still needed paying, whatever else needed paying. Debt accumulated. The biggest one was the mortgage. You know, a secured loan like that, if you miss a payment, get a default, it affects your credit score. There was one stage in my recovery, it went to 0, my credit score. So lending has been a massive issue ever since, and it still is to the current day. Obviously recovery, fit and well now, cancer's gone, 100% remission, perfect. Unfortunately, credit scores keep that, you know, for 6 years. So obviously post this, got all the debt paid off. We never really went to CCJs or anything like that. We never had debt collectors. We dealt with the debt. The problem is when we wanted to do stuff post, like go on holiday, you know, buy a new car or something like this, or potentially look at a new credit card, you just can't get the lending.
The credit scoring industry works incredibly well for people who are in stable long-term employment with mortgages, but for people who would be classed as near or subprime customers, people who have had a missed payment or a county court judgment or an IVA, who genuinely haven't kept up through their own problems with a credit agreement, their credit score goes down, and over time it's very hard to make that credit score go up. And as a result of that, the credit scoring that affects those consumers means that they're blocked from accessing mainstream credit products. So all of our customers bank with a UK bank, but they can't turn to that bank to get funding or a loan in times of emergency. The credit scoring industry doesn't really represent the propensity of a customer to pay. It basically saddles those customers with something that happens in the past.
I feel like I'm on a film cast. My name's Jenny. I'm a senior healthcare support worker at the Christie's NHS Foundation Trust. When you're younger, you make bad decisions and stuff like that, and as a young mum I was. Obviously, as I've grown up now, my kids are older, I'm like, I want to get myself back on track. And I think I had a Provident loan when I was younger, so obviously that was on my credit score, but with Provident they'd come and knock like on your door and you feel like you had to take it, and then they tried to be like your friend kind of thing, so you felt like you had to take it. Going back when I was 19, I wish I probably never answered the door, because obviously I'm fighting now to get my credit score, you know, at a reasonable level. It just kept building up and building up, and you were getting into a hole you can't get out of then. You just thought it's money at the end of the day, and obviously they don't give you all the like hidden background.
So one of the unique things about using open banking is that we can see in the previous 2 years where our consumers are borrowing from, and we can see that they are going to very high cost providers in excess of 1,000% APRs. I don't think those providers are doing enough from an affordability perspective in the decisioning for the lending that they're making, and we are turning down a lot of our customers because of the fact they have taken out very high cost borrowings from other providers. There has definitely been a reduction in the number of high cost providers who have rightly closed down as a result of numerous claims that have come in for unaffordable lending.
I'll start from the beginning. I am Adrian Barrowcliffe. I am a fleet maintenance worker for the ambulance service, as well as doing patient transport. My credit score was affected by somebody else. I had my brother living with me at the time, and when it came to paying the rent and bills, I gave him the money to pay them as I was working at the time, and he never paid them. It's taken me about 10 years to get everything back to where it should be. It is very easy to fall down a negative lending route. I mean, people with financial difficulty, sometimes that is the only option, and it just makes things worse. I do think the interest rate from most of the lenders is a little bit extortionate. It's just unfortunate people have to go down that route to make ends meet. Definitely not fair that lenders penalise people for silly mistakes in the past. People mature, people work hard to get to where they are, so I think everybody should have a chance, at least.
We see a lot of individuals across all social strata. My view of a consumer is that they've probably suffered some form of a life shock in the previous 6, 12 months or even years, and typically that life shock has been catastrophic in terms of the impact it therefore has on their credit score.
People will be missing payments, it affects your credit score and it's affecting it for the next 6 years. I think that's a big issue. I think the credit scores need to be changed to real life scenarios, you know, what actually happens, longer illnesses, people being out of work, people being part-time, how people manage their money, spend their money. I don't think credit scores really account for a lot of that stuff, especially even in business.
I think it's incredibly unfair that a missed payment or a satisfied CCJ is not viewed correctly as a sign of a consumer's ability to remediate themselves. I don't think that a consumer having one missed payment should be adjudged negatively and that be held against them. I think there are lots of reasons why things happen. I think it's a very binary measurement of someone's credit worthiness. There are many elements of the black art of credit scoring which I don't think consumers are aware of. We're quite convinced that open banking is a fantastic proxy for making affordable and appropriate lending decisions. So I'm excited about the films because it's never been done before, and I think there's a sort of real stigma about borrowing in the UK that needs to be broken. I also think that dealing with our decline customers, giving those customers an idea and an insight as to why we couldn't lend to them, perhaps it will help them remediate themselves. And we really do want to focus in on the customers that we can't lend to, but helping customers understand how they could improve their behaviours ultimately may make them a potential customer for their bank at some point in the future.